Hey guys, welcome to The Market is Open. Check out our website, themarketisopen.com. In this video, I wanted to talk about a massive bullish price target increase from Dan Ives at Wedbush, who has sort of changed his views on Tesla over the last year and now has one of the highest bull case 12-month price targets I've seen. Of course, we've looked at ARK Invest multiple times before, but ARK Invest's price targets are always looking 5 years out. Dan Ives from Wedbush made a pretty bold move after seeing that Tesla delivered 90,000 vehicles during a difficult quarter in which other automakers saw sales fall drastically in the US. While Tesla was down about 5% year over year, others were down around 30%. And that's despite having additional problems with Alameda County, which wasn't letting Tesla reopen in early May, which meant their main Fremont factory was shut down for about a month and a half this quarter, and yet Tesla still beat expectations and delivered 90,000 cars. So this prompted Wedbush to make some changes to their Tesla thesis and valuation, which we're going to have a look at. But before we begin, please hit the bell button to subscribe and be notified of upcoming Tesla videos, and smash the like button to help support this video. We'd super appreciate that. You can also support us further on Patreon at patreon.com/themarketisopen, and we give a shout out to our patrons at the end of each video. Alright, so let's talk about Dan Ives at Wedbush, who's a respected analyst on Wall Street and has been covering Tesla. I think Dan Ives has come a long way over just the last year even. One of our first videos on this channel was that analysts don't really understand Tesla, the company or the stock, and we highlighted Wedbush, an analyst firm, as being one of those companies. I think that Dan Ives has been very skeptical, maybe overly cautious on Tesla stock, which is a fair stance to take. He still has many ifs about the company, yet he has upped his Tesla valuations and targets dramatically over the last 12 months. Last year, at the end of June, so almost exactly a year ago, Dan Ives had a $230 price target on Tesla. Maybe rightfully so at the time, as Tesla did take a big loss in Q2 of last year. He highlighted that their delivery numbers between 90,000 and 100,000 at the time were ambitious, with Ives' estimates at about 80 to 84,000, so about 10,000 vehicles lower. Tesla ended up doing 95,000 vehicles in the quarter, so in retrospect, while the stock was in the $230 range at the time, that would have made a great buying opportunity for Tesla stock, and so being overly skeptical was not a good strategy at the time. Then, last year in October, we went over a statement from Wedbush saying that Elon Musk was juggling too many things and consistent profitability was something that they were looking for. So I think if you've been watching my videos, it was clear back then that Tesla was onto something and something big was about to happen with Tesla, and I think it was wrong to have been so skeptical. I mean, look at Tesla's revenue growth over 2011 to 2018, and it was $24 billion in 2019, so they've seen fairly consistent growth. We've also said that those things that he was worried about didn't make much sense because Tesla has 50,000 other employees as well. It's not just Elon doing all of the work for the entire company. Since then, we've seen a ramp up in Model 3 production, even despite the pandemic, and the China factory is up and running and has helped Tesla immensely. In addition, Tesla has been profitable over the last 3 quarters, so Ives got everything he wanted. I've got everything I wanted as well. And according to our estimates in the most recent video that we made, we're predicting that Tesla will be profitable in Q2 of this year in 2020, and we'll have 4 quarters in a row of profitability, but we're still waiting for these results in the coming month. Basically, what I'm saying is that Dan Ives is waiting for all of these things to happen, and then when they do happen, that's when he raises his price target. But like, what kind of a forecast is that? Okay, then in January of this year, in 2020, Wedbush dramatically increased their price target on Tesla, but it was still behind where the stock was currently trading at the time. They did set their bull case to $900 per share for Tesla, and a month later in February, Tesla actually hit $900 per share, which was his best case scenario and his high estimate. So it's kind of strange in my opinion that analysts have these wide ranges for bull and bear and base case targets for a 12-month period. It was kind of a weak call. Like, what do you do with this information that Wedbush was giving you at the time? Their price target was the current price of the stock, which was around $600 per share, and the bull price was $900 per share. Their bear target was obviously lower, but it's as if they were neutral on the stock at $500 or $600 per share, so they missed out on this run-up. To me, it doesn't really help to make a buy or sell decision if you're always neutral on the stock. And he keeps raising his price targets to keep up with the price movements of Tesla. Lastly, in January of this year, he did say that the China bull case was worth $300 per share for Tesla, which I thought was interesting, and you'll soon see why. Because now at the beginning of July 2020, so 6 months later, Dan Ives is back with an even bigger bull case target of $2,000 per share. So that's a big increase from $900 just 6 months ago. He's more than doubled his price target in that short time frame. And he did seem extremely impressed with the Q2 delivery numbers of over 90,000 vehicles, calling it a jaw dropper. So I think it makes sense that he follows with a price target increase. If you think about it, ARK Invest a couple of years ago stuck their necks out and said that their 5-year price target for Tesla was about $4,000 per share, and people laughed at them, and now Tesla is about a third the way there. So Ives having a $2,000 12-month bull case price target is pretty crazy in my opinion, and how quickly he sort of changed his mind or has adapted to the results that Tesla has produced, because he has been negative on the stock in the past. But at the same time, it reinforces the validity of ARK Invest and the quality of ARK Invest research, which I think is actually more powerful and more important than what Ives has done. Now, Dan Ives continues to say that China is huge for Tesla, but he still says that China is worth $300 to $400 per share for Tesla. So I find that mind-boggling, because when he had his $900 price target, he also said that China was worth $300 per share. So how does someone who's basing a huge chunk of Tesla's valuation on China raise their bull case, their price target, by $1,100 per share, but keep China the same at $300 to $400, keep that number the same? So he even says that China is the key to all of this. In reality, he effectively just decreased Tesla's reliance on China using his own estimate. So either he's putting more emphasis on Tesla's US operations, or maybe he's looking ahead at Giga Berlin, which I doubt. But I think one takeaway could be that if China boosts output and does better than he thinks, then there's still room for him to increase his estimates even further. So although Ives is saying that China is at the forefront of why Tesla stock is running up, he does mention that when he looks forward at Cybertruck, he estimates almost 700,000 pre-orders. He looks at the Model Y as well, which has just begun ramping up, and so it's possible that he's been putting more emphasis on this. But our knowledge about Cybertruck and Model Y hasn't really changed much over the last 6 months, so it's not really clear where his price targets are actually coming from. And also, Ives goes on to say that Tesla has scarcity value because while EVs are just a small percentage of the overall market, Tesla is the best play, and he still believes that it has room to go. So I think Ives has taken a very cautious approach to Tesla. They've been lagging behind the stock a bit, and I think he tries to get ahead of the curve by putting out this bull case target, but that target has no real accountability behind it. I can actually better predict Ives' price targets using Tesla's stock rather than the other way around, which is the way it's supposed to be. So for someone who sees future potential playing out and Tesla's solid track record, I'm surprised that his base case estimate, which is always the current share price, doesn't really reflect the future. It's always predicting the present, which doesn't need predicting. Now, furthermore, along the lines of this interview that I was watching with Ives on Yahoo Finance, he gets a question about Nikola and if they are a true competitor to Tesla. And what I find a bit confusing is that he calls Nikola's vehicle a game changer. To me, this is a bit out of character for Ives, who was and continues to be very cautious on Tesla. For every positive thing he says about Tesla, there's always a caveat. Like, Tesla's China factory could make 100,000 cars this year, but we need to wait and see if they can actually hit those milestones. So he's done this multiple times for many different aspects of Tesla. It's almost like he's not interested in making any predictions, but if certain events play out, he can then see that the stock has value. So to me, I think that's the main reason that he's been behind the curve for Tesla, because he's waiting for the numbers to come out before he gives the green light. But at that point, the stock has already moved and he's missed out on a large chunk of the gain. So the overly cautious approach works, but he seems to want to make sure he's right before dipping his toes into this kind of thing. Yet he says that what Nikola is working on is a game changer. So I don't really get that, because here you have somebody who's super cautious on Tesla every step of the way is now calling a newly IPO'd company with no revenue, no track record, and no prototype really, a game changer. Nikola shares nothing in common with Tesla. Their CEO is a great marketing guy, but their vaporware pickup truck looks like a toy. They're not vertically integrated in any way. They're not in China, which Ives likes so much. and they're juggling 7 different products and hydrogen stations and all this kind of unproven technology on their platform. So for somebody who was negative on Tesla for the longest time, and even when it was clear that Tesla was a winner, I just don't see how the words game changer come into play for Nikola. But what did strike me was that Dan Ives said that there was a window of opportunity at this time, and he also mentioned scarcity value earlier. And so I think that investors who feel like they've missed out on Tesla are putting their money into Nikola, and Nikola is taking major advantage of this opportunity that Tesla has basically presented to them to do an IPO and pretend that they have similar values to Tesla and behave like Elon Musk by bashing the short sellers, even though Tesla is a real engineering company and has been actually producing and selling cars for 12 years. If Nikola misses expectations in the future, I think the money will flow out of that stock just as easily as it came in and will probably go to Tesla after people realize what they're actually betting on. Dan Ives points out that Tesla, however, is continuing to own this market. He attributes their continued success to the brand and what Musk has built, and he mentions the company DNA. I think the DNA of the company, or the company culture, is the most important thing here as to why Tesla can succeed even during difficult times. They have great engineers who are clearly dedicated to making the company succeed. It's almost like 50,000 Elon Musks work at Tesla. I also think that the company DNA is the most difficult thing to copy, and it all starts with the founder and their values, and that's why it's so difficult for competitors to simply copy Tesla, since changing the company culture is nearly impossible, and growing one from scratch to 50,000 employees takes a ton of hard work. Again, his base case is $1,250 per share, which is basically where the stock is at right now. The bull case that Dan Ives has is $2,000. So I don't see the point of having a base case and a bullish case and a bearish case. It's just to help analysts save face or something in case they're wrong. Like, are you bullish or not? And what do they tell their clients? To buy or to sell or to do nothing? So I still consider this a weak call. It's like they can't make a decision, or their decision depends on some number that Tesla still needs to report in the future. And by that time, when Tesla reports that number, the stock will already run up again. And then Wedbush will have to catch up on their estimates. So he is neutral on the stock. He's had to raise his price target to be neutral. But one way to look at this bull case is that if Tesla hits their numbers that he's expecting, his bull case comes into play. And so I think you can still use his bull case versus your own to make an actual decision off of his research. Also, Dan Ives does give props to Cathie Wood from ARK Invest, giving them credit because they stuck through criticism for their price targets. And his own price target is starting to approach the magnitude of ARK's estimates that they made years ago. And I think we're seeing that ARK Invest has been ahead of the curve, and they've really made a positive name for themselves with their bold calls on Tesla. Currently, ARK has a $7,000 base case price target on Tesla, and that's their base case, but that's 5 years out. So I think the ARK team are the real thinkers, and Ives is just following along. Finally, he says, everything that Musk and Tesla have done is just one of the more transformational stories I've seen in covering tech for the last 20 years. So you'd think his price target would be more meaningful instead of neutral all the time for someone who's been in this business for 20 years and has lived through companies like Apple and Amazon and the large tech companies of today to say that this is one of the most transformational stories he's ever seen. His actions on the stock don't seem to be too much in line with that, and the approach seems overly cautious. Honestly, like, he doesn't have much to lose by making $2,000 be his base case target instead of his bull case. If he's wrong, then he's wrong, but if he's right, I think he would have more credibility than being on the fence all of the time. Alright guys, thank you so much for watching. I hope you enjoyed this video. Let me know in the comments what you thought. Please hit the like button, we'd super appreciate that. And you can also hit the bell button to subscribe and be notified of upcoming Tesla videos. You can also support us further on Patreon at patreon.com/themarketisopen, where we give a shout out to our patrons at the end of each video. Thanks so much for watching.